been a tough year for Nike. It's important to also think about the bigger picture, though. Nike over the last 10 years has really outperformed almost 90% of all the companies in the S&P 500. So to take a breather year is not out of line, and certainly not to be unexpected. But what you found really was this last quarter was what we believe to be the turning point for Nike, where really everything kind of flattened out. The earnings now have started to rebound, as you saw with this most recent quarter. And again, I think the lesson to be had is just you never throw in the towel on Nike.
Never thrown the towel on Nike, although they've thrown in the towel on giving visibility in terms of the pipeline, future orders. What gives with that? I mean, for an investor, if that happens to me, and I've been a long time owner and holder of Nike shares, I probably go like, oh, hold on, what are they hiding?
I think it's the opposite. It's not what they're hiding; it's what they're focusing on. They're trying to get away from this short-term hyper focus from Wall Street. Really, what causes them to really make the wrong decisions and to focus on kind of those short-term effects of rather than reinvestment, rather than focusing on new territories, new regions, and new product cycles, but actually trying to focus on the opposite, which is maybe an old product cycle that they can milk every last drop out of. So what we see with this is really a long-term trend that Nike's, again, focusing on that long-term, getting into markets and internationally. And if you just look at one thing that I think the investors have really been rewarded with is the dividend growth on this company. It's up almost 15% per year for the last 5 years. And even going forward, they're in one of the strongest positions in the S&P 500 to continue that kind of dividend growth.